Hi, I'm Seth Freudberg. I'm the Director of Options Training here at SMBU in Manhattan. I'm also the head trader of SMB Capital's Options Trading Desk. So today I would like to talk about losing trades. And it's actually a very, very important subject, and it is not focused on enough in the trading world. Some people do, but it's not given the focus that I think that it should, because it's such an important topic. So let's talk about what most of the options traders who follow our videos are trading, and that is market neutral options trades. And these kinds of trades have a very high win rate typically. Some trading strategies have as high as 85, 90% win rates. Now you compare that to a day trader. The best day trader here at SMB rarely has a higher than 50% win rate on his trades. So to have a trading style where you expect to make money most months, 9, 10 out of 12 months a year, you get a little spoiled and you start expecting to win most of the time, which is a problem a day trader never has. They know they're going to lose at least half of their trades, even if they're terrific, outstanding day traders. So these are trades with high win rates. And what does that mean? Let's say you've got a strategy that has an 80% expectancy of winning. That means you have a 20% expectancy of losing. 1 out of 5 times you're going to lose, theoretically. All right? So that's the way these strategies are designed. That's what you expect. You can have a trade strategy with an absolutely terrific return, but you expect to lose 20% of the time with that strategy. So think about how illogical it is for you to be upset when you lose on a trade. Let's count the ways that it's ridiculous to be upset when you lose a trade. You know for a fact you're going to lose a certain number of trades. You've backtested your strategy, it has a great return, and you lose 2 out of 10 times, okay? So what you're doing is getting upset about something that's completely anticipated. You're losing confidence. You're getting upset. You're getting angry at yourself. You're smashing up your keyboard like some day traders do for something that is absolutely anticipated in the very best trading strategies. By the way, this same principle of not getting upset when you lose applies in the reverse to not getting upset, to not getting overly exuberant when you win. Because if you have a trade strategy where you're going to win 8 out of 10 times and you win, all you're doing is the thing that happens most of the time, even to a trader who may not be that skilled. So being overly exuberant about winning is the flip side to being overly depressed about losing. Look, no one likes to lose a trade. I've never met a trader that likes to lose a trade, but get a grip. You've got to have some understanding that losing is part of the expectancy and the probability of any kind of trading, and specifically market neutral options trading, where you win so often it can be a little more stinging to lose, but it shouldn't be, because it's fully anticipated. So why is this important? I mean, who cares if you get upset? And the answer is, traders who get too upset about losing tend to try not to lose. They're not trading to win, they're trading not to lose. Those are two very different things. And if you're trading not to lose, what I've noticed from my own trading is that you will lose larger when you lose, and when you win, you will win less, because you were hedging so much not to lose that when the trade just naturally won, you've blown all this money on hedges that you never should have bothered with in the first place. In other words, trying to win every month is a loser's game. Trying to win every month means you will make less money trading. There's a famous story about a baseball player who was told by his manager to bunt. He went up, instead of bunting, he hit a home run. He rounds the bases, comes back into the dugout, and he is informed by his manager that he is going to be fined for hitting that home run. Why? Because he was supposed to bunt. In the game situation that he was in, he did the wrong thing. He did something that was selfish for his team because he did not do the thing that created the highest probability of the team winning, which is bunting. It worked out in that case, but in most cases, it was the wrong thing to do and would have hurt the team by hitting away instead of bunting. The same thing applies to trading. You're a good trader if you follow your plan, even if you lose money. You're a bad trader if you don't follow your plan, even if you lose money, even if you make money. And the reason is because in the long run, following your plan will make you more money than not following your plan. Even though in any one particular month, you may make money where you otherwise would have lost money. When I first started to develop my relationship with the folks here at SMB, it was almost 7 years ago now, and I attended SMB's day trading course, which is called Equity Foundation. Great course, by the way. And I remember one day during the course, Mike Bellafiore brought all the traders into the training room, and it was a day where the market had initially rallied. The SPYs were rallying, and they looked like they were setting up for another leg higher. And 9 out of 10 day traders would have gone long at that point. And at that exact point, the market started to sell off. And so Mike brought everyone in the room, and he said, I want to show you something about the way the market set up today. And he showed how every good trader would have gone long at the point where the market, in fact, ended up selling off. So he said, what I'm telling you is the setup was right to go long, and therefore you should have gone long, and therefore what I'm telling you is it's your job to lose money in this circumstance. You're not doing your job if you make money and go short at this point. You're doing your job by losing money in this case. Why? Because in most cases, you would have made money in that circumstance. And in the long run, going long at that point, you would have made money. Since you don't know what the market is going to do next, all you can do is follow the probabilities. You should always do the thing that probabilistically will work out best for you. If that trader who went short at that point and made money was playing baseball, he probably would have been fined by his manager. And that manager, by the way, is an excellent manager. That is a manager who is trying to teach his team long-term the best way to win. So follow your plan. Sometimes following your plan means losing money. The best plans will always have circumstances where money is lost. And if you follow excellent plans and you're a competent trader with all the traits of a good trader, you're going to make money. If you don't follow your plan in any one circumstance, you may make money, but in the long term, you will make less money, or you may not make it as a trader at all. My money would be you wouldn't even make it as a trader at all because you're not disciplined. So think about that, trade the plan, and you will be a successful trader long term. Thanks very much, and we'll see you next week.